Welcome back to QAV TK. This is episode 910. We're recording this on the 10th of March, 2026. Before we get into everything going on in the world, RIP Jamie Dunn, Brisbane boy, brought so much entertainment to so many of us over the decades, going back to when I was a kid or a teenager, at least. And I never really caught any of his radio stuff. He's the puppeteer behind Agro, for anyone who doesn't know, but I'm sure everyone does. Passed away a couple of days ago. Yeah, brought lots of joy. I believe he was on radio for years after Agro went off TV, but lots of joy to lots of people over lots of decades. So not a bad effort, and fairly unique. I mean, I think Conan used to have some cigar smoking dog on his show. Can't remember the name of it now. That was similar. I don't know if Agro was first or not, but yeah, that kind of. I mean, even was Aussie Ostrich wasn't like Agro. None of
No.
Blackman's puppet characters really went as far as Agro did. Agro was in a level of his own, wasn't he?
He was brought a lot of adult viewers to children's programs because there was so much double entendre going on. Yeah.
Yeah. So tip our hat. Speaking of Agro, I bought QAV Energy yesterday for the light portfolio because the oil price was up. Look at it today, down 8% already this morning because Trump apparently came out overnight, declared that the war's basically almost over. So I texted my mate, my Iranian friend from Kung Fu, and I go, well, apparently it's over now. How did that work out? The regime's still in power. The son of Khamenei Jr., is the new Ayatollah.
Can you imagine anyone else was ever going to put their hand up for that job?
Yeah, I think there were a couple of contenders actually, but anyway.
Does it come with its own Target T-shirt?
Well, see, that's the thing. They don't care. Like, I don't know if you saw it last week, but it was after they killed Khamenei last week. There was all these stories I was seeing about how the CIA and Mossad had infiltrated the traffic cameras and were tracking him and knew exactly where he was going to be. Yeah, he was at home waiting to be hit by a missile.
Where he'd been there for a long time, yeah.
Yeah, he was ready to be martyred for the cause. It's not rocket science where he was going to be. But they've had this whole story about, oh, you can't hide from the CIA and Mossad in your home, in your living room, with a big sign out the front, go, I'm ready when you are. Ready for my virgins. Yeah, I mean, as I was saying, my Iranian friend was saying on the weekend, it's a win-win for them, you know. They get killed by the infidel. It's a win. They're martyrs for the cause. They don't get killed. They're a win. It's a no-lose proposition when you believe in martyrdom. It's like Ray and I always used to say about Alexander the Great when he was invading countries, and he would, if he got sick of waiting for his soldiers to climb over a wall, he would just do it himself because it was a no-lose proposition. If he got killed on the other end, they'd write epic poems about him like they did Achilles, his hero. And if he won, it was all good. Unfortunately, a few times he just got stabbed with a spear and spent 6 months recovery with a gut wound. But even then, he was considered
That's
a
what
legend.
happens if you see life in black and white terms.
Yeah.
It's the grey area that gets you. Yeah.
Well, yeah. Anyway, so yeah, QAV Energy dropped 8% this morning. And, you know, look, I don't think any of us believe anything Trump says, obviously, except for the Trump supporters. But it just seems to me that he tacoed this again. Trump says something, market goes down. Trump says something else, the market goes back up. You can't tell me that someone's not making arbitrage money by knowing what decisions he's making in advance. Buy oil, sell oil.
Yeah, feeding him
buy
to
gold,
it. Yeah.
sell gold, Trump
Absolutely.
coin, whatever it is. He said he had a good chat with Vladimir Putin last night. He's going to ease some sanctions on unspecified countries. He's going to be easing some oil sanctions on unspecified countries, and we'll see how it goes. Anyway.
And Trump usually deals with the last person he spoke to, so we can guess which country he's talking about.
Chanticleer today. The US president seems to be looking for the exit ramp from his war in the Middle East. Investors are relieved, but it's too early for the all clear siren. Oil is in a bear market. Yes, you read that right. Less than a day after crude prices leapt more than 30% to about 120 US dollars, they're back down to US $82 after
Wow.
another wild day on markets ended with US President Donald Trump saying he thinks the war in Iran is very complete pretty much.
Is
Oh
that
my God.
how many times have we heard that though? Immigration is contained, walls finished.
Except when it's Iranian soccer players in Australia and then he's offering to give them asylum in the United States.
Oh, I hadn't seen that.
You didn't hear that story?
No, I got the fact that there were 5 who had been given asylum in Australia this morning.
He started tweeting on Truth Social in the middle of the night last night that Albanese was committing a human rights violation by forcing the Iranian women's soccer team to go back to Iran, forcing Albanese to get on a phone call with him at like 2 a.m. to tell him that we were 48 hours into the process already of giving the 5 that had requested asylum, which had been signed at like 1:30 a.m. this morning. And then Trump said, "Oh, okay, apparently he's doing something about it." But Trump didn't call him. He just started truth socialing about how Albo was doing a terrible job of. And Trump apparently said that if we didn't give them asylum, the United States would give them asylum. So when
Right.
ICE isn't kicking immigrants out of the country, Trump's giving them a front door into the country. Anyway, so the Iran thing, who knows what's going on, but it's created absolute chaos.
Yeah,
He did say,
that's
we're
that's the
waiving
game
certain.
plan.
Yes, chaos. Does he have to do this every time? It's not it's Dr. Evil. It's not chaos. What's the chaos line?
Aka, we don't do that in
Front!
chaos. We
We're
don't do
also
epic fury and chaos.
we're also waiving certain oil-related sanctions to reduce prices. So we have sanctions on some countries. We're going to take those sanctions off till this straightens out, and who knows, maybe we won't have to put them on, Trump said during a press conference in Doral. There'll be so much peace, but when the time comes, the US Navy and its partners will escort tankers through the strait if needed. I hope it's not going to be needed, but if it's needed, we'll escort them right through, he added.
I don't think that will happen, is my take, because the biggest thing about those tankers and why they're not going through the Straits of Hormuz is the insurers dropped the insurance. They said you can sail through the Straits of Hormuz. If you get blown up, well, it's going to pay you out. There's no insurance. So they stopped doing it.
Trump said he would back them. He would provide the insurance. And if there's
Oh, I
anything
hadn't
about
heard that.
Donald Trump,
I heard him say he'd shepherd them through. But
he also said he'd cover the
that's not
insurance, I
risk
think. But
free.
like, if there's anything you can be sure about, is if Donald Trump says he's going to be good for something,
Right.
he may or may not be good for it. I mean,
oh, could you imagine knocking on the door of Mar-a-Lago saying, could you please pay up this insurance bill for my oil tanker, please, Mr. Trump?
Yeah. So Chanticleer yesterday morning, panic just hit the ASX. This could get ugly. The growing ramifications of the conflict in Iran are now rushing through richly valued and complacent markets. Australia just set the tone for a very nasty few days on global markets after a weekend of growing fear about the consequences of spreading conflict in Iran. Investors moved from concern into something that feels a lot like panic. Today, oil's in a bear market. Yes, you read that right. Like, it must be fun being a journalist right now. It's not like you don't have your work cut out for you. But again, from a QAV perspective, I did have to sell a bunch of things yesterday. I haven't checked them today to see if there's any regrets.
Hoping you haven't checked them today.
No, I haven't checked them. Yesterday, I had to sell Service Stream, SSM. It breached its 3PTL, but we owned it in 2 light portfolios that we had bought in November 2023, 2 parcels. They were both up 106, 108%. I didn't check if there were any dividends, but there probably were. Had to sell Qantas because it was down 21% and was a Rule 1 sell. I had to sell MAF. It was a Rule 1 sell, down 21%. And LAU was a 3PTL sell, down 11%. And I bought Karoon Energy, but as I said, now that's down 8%. I like the fact that we've got this rule in place for ourselves that if we suggest something as a buy, we don't buy it for our personal portfolios for 24 hours because Karoon Energy was down 8% when I added it to my super portfolio this morning because I couldn't add it yesterday when I sold SSM from my super portfolio.
How could you buy Karoon Energy today if it was down?
Well, I bought it before I knew it was down.
Oh, okay.
I had a note.
Yeah.
I had a reminder to buy it this morning. I got up. I checked the Bredelator. Didn't show anything. All good. So I bought it. And then I put in the price and I was like, that feels cheaper than it was yesterday. I checked it and I was like, oh well, you win some, you lose some. Because usually it's up. And yesterday I was like, oh, it's going to probably be too expensive for me to buy it tomorrow. But it was all good. Anyway.
Isn't it an interesting thing though? I mean, so I'm going to do a pulled pork on another company today as well, Viva Energy, because there's not much on the buy list to buy except for all companies at the moment.
Yeah.
But as I'm doing it, I'm thinking to myself, and I did it this morning before the market opened, and I'm thinking to myself, okay, oil price is up. To have any effect on the bottom line or the share price of this company or any of the other oil companies, it's got to stay up for a long time.
Has to flow through to revenues and profits.
Yeah, but over a substantial period. Otherwise, if it's a short-term blip, it doesn't make much difference. It's worth something, but it's not worth 5 years worth of increased margins, for example. That's point number one. Point number two is that all the oil companies go up. They all compete against each other. The margins are going to get competed down. So it'll be a short to medium term hit at best.
Yeah.
And yet they're all up 10% on one day's trade. There's got to be something else going on there. Like, potentially someone's using them to hedge something, or like they couldn't buy the commodities, so they're buying the stock or something like that. But yeah, I just thought this whole idea in the market at the moment of ready, fire, aim, it's just it's amazing to watch. And yeah, it's probably turning out to be too short term in this case.
I got an email this morning from one of our oldest, well, not that he's old, longest term QAV Light members, Jason, who said he's had to buy and sell Karoon and Horizon too many times in the past. He's been burnt from them too many times that he didn't want to buy them again. And should he just wait? And I said, well, look, I know how you feel because I feel that way about several stocks. And I know what Tony would say is like, oh, you think you're smarter than the system now, huh? I said, but don't buy anything you don't want to buy, obviously. But there's nothing else to buy really except oil stocks right now because everything's down. But I went back and looked at my history of buying Karoon and Horizon. And yeah, I normally have to sell them when oil becomes a commodity sell, inevitably again. Sometimes they've become a Rule 1 or a 3-point trendline sell as well. But yeah, I haven't had a good track record with either of them over the years either. They haven't been good investments, but what am I going to do? System says buy, I shut up and buy.
Yeah, look, I agree. I had been mulling the idea of like putting a 24-hour grace period before taking action in case things are being moved around by AI bots or momentum traders or whatever. But yeah, I haven't done any testing on that, so who knows.
Speaking of AI bots and commodities, morning project this morning, I finally coded the commodity chart analysis.
Oh, really? Well done.
Crazy. I've been trying to do it for 2 years.
You deserve a medal.
That's an inside joke. I've been trying to do this for a couple of years, right? And it's always been a challenge because I can't get the prices, like the no equivalent of Yahoo Finance really for all the commodities we want. But Taylor's been using Claude Code recently, and he said, just give it to Claude Code. He didn't say give me, he said, just start using Claude Code. So this morning I just gave it to Claude Code and said, can you work this out? Here's all my attempts at the past. Here's what it should do. Bang, figured out how to
Really?
go into Stock Doctor or TradingView or whatever it is, do a screenshot of the chart, give the chart to the Claude API, and then give it the rules for writing a 3-point trend line and say, tell me if this is a buy or a sell or a Josephine. And it just does it.
Oh, wow. Fantastic.
Just does a screenshot and analyzes the screenshot. It's like so simple, really, but I've been trying to figure out a way to do this for a long time. So, yeah.
What does Claude Code cost?
Well, there are different levels of monthly fees. I just signed up for Claude Pro a week or so ago, which is their sort of first tier payment. It's like $30 a month, but I keep hitting my limit. So I crash, you get a limit of usage per day and per week, and I keep hitting it. Taylor's on Claude Max, which is more like $100 US a month.
Okay.
And he said, he hasn't hit his limit yet, but he just he's coding an app. He just coded an entire iPhone app with it. He said it's just insanely powerful and good. So I keep thinking, okay, if I keep hitting my limit, I'll just spend the $100 and keep it coding 24/7.
Wow. Yeah, he was telling me about the app he made, and I didn't follow him for most of it, but what I did follow, which I thought was impressive, was it goes into Xero and pulls out and his emails and pulls out who he's been talking to, when their contract payment is due, when their invoice should be sent, goes into Xero, gets the details and sends them an invoice, which I thought was fantastic. And perhaps that's behind a lot of these sell-offs in companies like Xero, because if Claude can take their basic infrastructure and then ramp it up at a level, that's huge.
And just, we are right on the doorstep of, hey, build me an accounting app for my business. And it'll just build one in a day, and you'll have your own customized accounting app, no fees, upgrade it whenever you want, add features whenever you want. We're at this era where people and businesses will just be able to code their own solutions for stuff. So the whole market and Nutella, whatever his name is, the head of Microsoft, Satya Nadella.
Nadella.
Yeah, I just think Nutella. That's how I remember it.
Okay.
Satisfying Nutella. He's been saying this for like a year, like the era of software is over. It's just a question of how long it's got left in it, right? But
even companies like Xero have been their own worst enemy. I mean, I like Xero, I use Xero, Ruddy's my accountant, and I'll say to him, can you put the budget in there so we can compare, so we can track this business against budget? No, I can't do that. And so Ruddy said, I've been trying to get Xero to do that for ages. They won't do it.
Yeah.
And he's kind of worked out there's like a list somewhere in Xero of 10,000 things that their users want, and they're just not getting to it.
Yeah. Feature requests. A friend of mine from Kung Fu just got a job at MyOb. He's a coder. He left Atlassian and went to MyOb.
3-month contract.
Yeah. And he's part of the AI team. Like their job is to figure out how to integrate AI into MyOb. And I'm like, yeah, that's like rearranging the deck chairs on the Titanic job, really, isn't it? And, this whole thing about, we're going to integrate AI. Yeah. Okay. Sure. Yeah. You and the ASX. Good luck with that. Anyway, back to stories. RBA concerns realised, Tony. Inflation expectations hit 3-year high. This came out just a couple of hours ago in the Fin.
Before the oil price dropped.
Consumer inflation expectations have jumped to a 3-year high in response to soaring petrol prices if there's one thing I'm confident of, Tony, is that petrol prices will be falling just as quickly as the oil price. No, I'm kidding. Yeah.
just as quickly as the bank's lower interest rates. Yeah.
Weekly inflation expectations lifted 0.8 of a percentage point to 6.1%, the largest weekly rise since the ANZ Roy Morgan Consumer Confidence Survey began the measurement in 2010. Consumer confidence fell 3.7 points to 73.4, the weakest level since July 2023. Bullock expressed concern at the Australian Financial Review Business Summit last week that higher oil and petrol prices could fuel the public's expectations of higher inflation and become a self-fulfilling prophecy as prices and wages adjust higher in response. Well, we'll see what they say tomorrow. And then when things change the day after that, we'll see what they say the day after that. Like, making light slightly, but again, and I don't know how many times I'm going to say this, but probably every show we ever do, thank you, we have QAV.
Go on, say it. Go on.
Well, that's what I call you when, when we're not on air.
Mm-hmm.
My Lord and Savior, Tony Coniston. Trying to navigate the absolute chaos of the markets right now, if you didn't have a system that just said, shut up, do what I tell you, would be nerve-wracking.
Correct. Yep. And, prior to the system, that's exactly what it was. There'd be something in the Middle East, there'd be a bond crisis, there'd be, BRICS default or whatever. And you'd face this. Monday, the roof's falling in. Tuesday, you're building another story. It's just so topsy-turvy. And everyone jumps at shadows, and that's just the wrong way to be an investor. I have a quote I put in. I shouldn't say a quote. I made it up. I'm quoting myself. But
as I always say.
Yeah, as I always say. It struck me like just yesterday. I was in the gym and I was listening to a podcast on investing, and people were talking about exits from the market at the moment. This was yesterday, and I'm thinking, it's not a prize fight. Like, people go into the share market thinking they're going to go 15 rounds without getting punched, and as soon as they cop one in the face, they go, "Oh, this is not for me," and they get out.
Mm-hmm.
But it's not that. It's really the rope-a-dope. It's how many hits can you take, and you're still there in 15 rounds.
Wow, you sound like my Sifu.
I
mean, that's exactly what sparring is like at Kung Fu. It's like, you're going to get hit. You're going to get hurt.
Yep.
Get used to it. That's part of fighting, right?
Yeah, exactly.
But you get hit a few times and you go, okay, that wasn't so bad, right? I just got punched in the mouth. I elbowed a guy in the mouth last week. But, you get hurt. You go, okay, well, I lived through that. It's okay. I keep fighting, right?
And you might say to yourself, are there any rules I can put in place so I don't get hit in the mouth again?
Keep your guard up.
Yeah, exactly. So you improve your system. Yeah.
Yeah, but and we talked about this with Dave from Newey's wonderful email last week. He's seen the cycle go up. He's seen the cycle go down. He's seen the cycle come back up again. You see that enough times and you just know, okay, that's how cycles work. They go up, they go down, they go back up. It doesn't matter. It's okay. We just trade through. So, LNG story. Trump's attack on Iran could drive up Australia's power prices. Well, duh. This was an article in the ABC from Saturday, the 7th of March, talking about LNG. I didn't realize this, though, until I read the article. Qatar provides about 20% of the world's liquefied natural gas, putting it second in the world for gas exports behind the US and ahead of third-placed Australia. Just like the oil, it needs to pass through the Strait of Hormuz, the thin stretch of water flanked by Iran to the north and the Arab states to the south. It's a critical and vulnerable choke point, blah, blah, blah. So LNG, while LNG doesn't account for all of the world's gas consumption, as many supply chains rely on pipelines across borders and even continents, it is highly critical for certain markets, especially in Asia. Some 83% of the gas shipped through the Strait in 2024 went to Asian markets, according to estimates from the US Energy Information Administration, with China, India, Japan, and Korea taking the majority. It also says Australia's East Coast gas fields were opened up to the export market from 2015, but structural policy flaws meant that Australia, one of the world's largest gas exporters, was left facing warnings of a gas shortage and high prices because the vast majority of Australian gas is being exported. So, yeah, I guess we're selling it to Asia as well.
Especially now if Qatar can't get through. I think it's even a little bit worse than that, because I thought either in that article or somewhere else I read that Qatar had actually shut down its production because it was at risk of being destroyed by Iran, or one of the facilities had been hit by Iran, so they shut off everything.
Well, I think they can't ship it. So if you can't ship it, you can't, and they've run out of storage capacity.
Oh, so they're shutting it down. Yeah, okay. Yeah, right. So, and there'll be lag times with restarting it too, I imagine. But that creates a huge opportunity for Santos and Woodside, who are exporting from Australia. They'll be jacking their prices up because they're going into Asia as well. So it'll help them. And that's probably more of a sustainable long-term trend affecting a share price than the oil price is on Karoon or someone like that, I would have thought.
A couple of stories from QAV related stocks that popped up in my news, Tony. Our old friend / enemies, Findy, FND, proposed issue of securities. Now, the way that I read this is they're issuing some options, but also nearly 36 million ordinary fully paid shares are being issued. And they currently only have about, I think, 60, 70 million shares outstanding. I'm trying to find, I thought I had written that down somewhere.
You still have Findy in one of the portfolios? Because I think it's been off our list for a while, hasn't it?
I think we did sell it when they had some allegations of something, and then something else was going on, and some numbers didn't come in nicely or whatever. Yeah, no, I don't hold them.
I don't really follow it, but it looks like they've done a capital raise, which is why the new shares are being issued. The capital raise will have been to institutional investors, so they often do an option raise at the same time, which gives a retail investor a chance to also get in and benefit from a cheaper, potential cheaper price than what the share price is now, and buying into the cheaper price. Look, I started to look at this and just thought, this is so detailed, but it looks like when I did the pulled pork on them, the big great white hope for them was splitting off part of their business and listing it separately on the Indian stock market, which I think might have been either their banking division or their ATM division from memory. That's still yet to happen, but it's getting closer. But it looks like, and again, I don't know the detail, somebody else is positioned to take a stake in the business that's going to get floated off. And the capital raise is meant to raise money to try and block that stake. And Fendi had presentations saying that even though you're being diluted, when we list on the Indian Stock Exchange, it's going to be a big deal, and the dilution on Fendi will be just blown away by having a bigger stake of the IPO listing, something. So, yeah, that's what's going on in a nutshell.
I bought them in May of 2024 at $3.22. By November 2024, they were up to $7.50. I sold them in October 2025 at $2.56, down 20%, rule one sell, and they're now at 99 cents. And we make fun of Bitcoin. There you go. Findy, the Bitcoin of Australian financial stocks.
India.
Well, yeah. So there you go. The other one another one I've got is Genus Plus, GNP. They came out with an announcement. Acquisition of rail train adds critical scale and diversification to Genus's rail business. Reminds me of many years ago when Fox said, "Daddy, you're a genius." I was like, "Oh, thanks, Fox."
Did you say no, Genius Plus?
Genus, GMP. I know they've been on and off the buy list. I hold them. actually. I bought them in October and November 2024. Around about $2.50, $2.60. They're up 200+% since then, and up another 5% today. I don't know if that's on the back of this announcement or not. When was this announcement? 4th of March, a week ago. Anyway, so good little holding for us. Actually, one of them's in the portfolio. One of them was a possible buy for light stocks, but the first one, 14th of November, I bought it, $2.54. It's currently $7.96.
So you bought them at $2.54 in November?
24.
Oh, 24. Okay.
24,
that makes more sense. Yeah.
So a year and 6 months, I guess.
And from memory, they're all about electricity infrastructure and communications infrastructure. And I think this company that they're acquiring has a lot of different things, but it provides power line infrastructure to railway networks, amongst what it does.
They deliver overhead wiring solutions, rail maintenance and construction, track protection services, rail signalling and electricals, rail surveying, and the supply and training of rail personnel to rail operators and infrastructure owners. I think somebody was getting paid for the number of times they could get rail into a single sentence. Rail Train and subsidiaries generated pro forma normalised revenue of $96 million and EBITDA of $16 million in FY25. However, is expected to have a weaker FY26 due to project delays. Genus Plus, according to Stock Doctor, they provide power and communications infrastructure services across Australia. The organisation undertakes the design, construction and maintenance of electrical transmission networks, distribution networks, substations and battery systems. So electricity, who would have thought that'd be a good business to be in right now? Everyone.
Especially if the country keeps electrifying, yeah.
Another announcement from our friends at Embark Early Education, EVO. They have announced a takeover bid for other old friends of ours, Mayfield Childcare, MFD. It's an off-market takeover for ordinary shares, closed at 7 p.m. on the 5th of March 2026. ASX announcement released on the 9th of March 2026. So there was an error there. But yeah, with something that they issued according to this, not a good sign. But yes, they've received valid acceptances of enough shares to bring their total relevant interest to 48.58%. What's the cutoff for being able to do an acquisition? Is it like 50% or?
50% gives you control, so you can stack the board. But no, it's normally, well, it depends on the type, but it's normally like 75 or even 90 before 90% is the next threshold where you can get compulsory acquisition, which means that you can acquire the remaining 10% without them agreeing to it.
I'm looking to see what announcements Mayfair have made, but I
think it's the other one might be 75%. Might be when you can start consolidating the financials into your own, something like that.
Well, yes, the announcements on Stock Doctor in Mayfield's page is just all the same as the Embark, the EVO announcements. But anyway, looks like that's going ahead. So MFD won't be on our buy list anymore.
Which I think was a small ADT stock anyway, wasn't it? MFD? Because it was listed, it's a dual listing from memory in Australia and New Zealand, I think.
Market cap 31 million, average daily trade 17,000. So big enough to be on our list, but not big enough for most people to play around in. Anyway, there you go. So what else have I got? That's it. That's all of my announcements for this week, Tony. Oh,
no, I'm just looking at Stock Doctor. Sorry, Mayfield's a Victorian-based.
Oh, right.
Childcare. Yep.
Let me just do a portfolio. I haven't looked today since the market picked back up. For the last 30 days, the dummy portfolio is now up 0.55% versus 1.13% for the index. We were down as of last night, 1% for the 30 days. For the last 5 years, we're up 15% per annum versus 9% for the market. This financial year, we're up 18, well, closer to 19% per annum versus 5 for the SPDR 200. So nearly quadruple market. The last 1 year, we're up 27.4% per annum versus 14% for the index for the last 1 year. So double market from that perspective. And the light group, last 1 year is up 34% versus 14. This financial year is up 23% versus 5. And all time is up 18.6 versus 10.3. We've dropped a lot in the last couple of weeks, but yeah. So there you go. That's all I got for you. Things are going okay.
Good.
What do you got for me today,
unless
TK?
You're in Iran.
Yeah.
Not much. I kind of resist the temptation to try and prognosticate about the oil price or Middle East or Pete Hegseth tattoos or whatever, but it's tempting.
Probably a good decision.
Yeah.
Well, you'll have to change it in a day anyway. So
yeah. But I'm doing a pulled pork. That's what I've got today on Viva Energy.
Viva la Energia!
Viva Las Makers.
I told you I just watched that
recently.
recently.
Call it that. Yeah.
Oh, so good.
It's not really a loss maker, but it's not doing great. And I should also declare it was my old employer back before.
Hold on, this isn't Viva Leisure. This is Viva Energy. What's the ticker for this?
VEA.
That's right. They are your old employer?
Yeah, it's Shell.
Is it really?
Yeah.
Huh. Wow.
Yeah.
Okay.
Yep. So, and I thought I'd done them before, but I couldn't see it on the list of pulled pork. So maybe I did it very, very early on in QAV time. Look, it's been bouncing on and off the buy list for a long time now. It's back on this week following the oil price surge, and if the oil price is down again, who knows if it'll stay on. I think it's down today. I did my analysis before the market opened today. I guess even from just a zeitgeist point of view, there were pictures in the paper today of people lining up and trying to buy petrol before the price rise, and the petrol station owner was saying it's like Lord of the Flies and people are cutting in and getting angry and whatnot. And it made me think about the economy. So back when I was working at Shell, and things may have changed now, but it took about a week and a half for the oil price change to flow through to the pump, at least in terms of you follow the stock, right? But what often happened was the day the oil price rose, the pump price went up as well. Which meant retailers made out like bandits selling old stock at new prices and did very well. And I checked with ChatGPT. It's still about the same now. It's said between 3 and 7 days. So it's been about 10 days since the first strike on Iran. So it's probably right that the pump prices are now starting to hike. Whatever happens to the oil price, this last week, especially the weekend, is going to be a bonanza for a company like Viva Energy. So they may well have made bank for the half just in the last week. Yeah. But the motorists were right, because one of the things that companies like Viva do, and it used to happen when I was working at Shell, is they have a pricing system called terminal gate pricing, which is basically the way they set the wholesale price for anyone who rocks up with a tanker to a Shell terminal and can load it will get charged a certain price, advertised price for fuel. And at the moment, according to VEA's website this morning, unleaded petrol to buy wholesale is $1.93.96 in Victoria, and diesel's $2.31.57 per litre. So if you add a retail margin onto that, which Used to be almost nothing back in the 90s when I was working at Shell, but now it's anywhere between 10 and 40 cents a litre. I guess because the pump price has gone up with inflation, but also too, there's been a lot of rationalisation in the oil industry, so there are less independents competing, and then the whole Woolworths, Coles duopoly, when it took over service station operations, kind of stabilised the market and brought margins back into retail. But yeah, so look, if you add 10 or 20 cents to that, you're going to be paying $2.13 for unleaded petrol for probably a long time. Going by those prices, who knows? They might change tomorrow if the oil price comes down. Again, they'll be quick to go up and slow to come down. The other question is, if it does continue ongoing, what happens to the pump price? Because as happened in COVID, a lot of the margin, or a lot of the markup in fuel is taxes, and there was a government fuel rebate. They stopped charging one of their taxes or part of their taxes during COVID, which put downward pressure on prices. And I guess if the oil price stays high because of Middle East problems, then they may do it again. So that's also, I guess, got to come into the mix. Who is Viva Energy? According to Stock Doctor, it's one of Australia's largest energy companies. It owns and operates the Geelong refinery in Victoria. There's only one of 2 refineries left in Australia. There used to be 4, 2 have shut. It's a major supplier of fuel products, including petrol, diesel, and jet fuel, so a big supplier to the aviation industry. And it distributes the fuels through a vast network of retail and commercial channels, most notably via the Coles Express branded service stations. Stock Doctor's a bit out of date here because they're being rebranded to Ready Express, because a little while ago Viva took back the 99-year lease that Coles had on operating the Shell service stations. So that's back in the hands of Viva now. They also supply fuel to airports, mines, shipping ports, and other industrial users in Australia. They were established in 2014. So Shell sold off its retail business, what's called its downstream business. So if you include refineries as part of the retail business, for $2.9 billion. It was sold to a French company called Vitol, who took a big stake in it. Rebranded it Viva Energy, and then in 2018 listed it on the ASX. And Australia has 2 listed retailers for fuel and oil, Viva, which is Shell, and Ampol, which is also listed. And I had a look at their share prices over time, and they've both been fairly similar over the last 5 years. So maybe Ampol's nosed ahead a little bit, but reasonably similar. So it kind of suggests that they are driven by the oil price, and that they're kind of mature businesses doing the same thing. When it listed, it also spun out a property trust, originally called the Viva Energy REIT, although it was rebranded. I think it's now called Waypoint REIT. But it's the property ownership part of the business. It's a fairly common sort of retail tactic to do that. Myer did it. Most big retailers do it as a way of not having to invest in the capex of buying real estate, which has a slow growth profile. They'd rather put that capex into keeping the business ticking over. It's now also making moves into the EV charging and alternative fuel space, although I noticed at least Ampol have quietly said they're slowing down their rollout of those things. Again, with this whole sort of question mark over the future of alternatives when the US is going drill, baby, drill, and not as strongly into EV vehicles, although China is. But certainly they slowed down their EV charging network rollout. There's many, so that's the snapshot Stock Doctor gives on Viva. There are many things going on in the fuel industry, and they impact or are being participated in by Viva. So when I worked for Shell, convenience store retailing was on the ascend, and it grew to be a major profit driver for retail business. And in the end, fuel was often sold on thin margins or at a slight loss, A, to keep the refineries going at full capacity, but also B, to be a loss leader to bring cars into the convenience store network, which had sort of 40, 50% margins. So that's where the profit was on the service station. History of it is Shell brought Circle K into Australia as a bit of a dress rehearsal for rolling out a beefed up Shell shop convenience store network. So Circle K came in under a JV arrangement, and then as soon as Shell management learned the ropes from Circle K, they said, thank you, we'll take it from here. And they terminated the deal and started rolling out beefed up convenience stores under the Shell shop brand. And before that happened, if you walked into a service station, like I did when I was a kid, you'd see that the shop was small. It would just be a cash register and a desk, and it would probably have a wall of timing belts and radiator caps and spare parts for cars, funnels for your fuel tank and things like that. So it went from there to being a mini supermarket. Big expansion when I worked there into convenience retailing. As I said, it shifted the profit on the forecourt. The next major milestone was the 99-year lease that when Coles bought into the Shell network and took over ownership and running. And that was seen to be a good deal because it was seen that the convenience store network would benefit from supermarket retail infrastructure and management. But the key to the success was really the operation was really the 4-cent shopper dockets that Coles and Woolworths did. Woolworths had a similar deal with Ampol. And they both offered 4 cents a litre off the pump if you were a supermarket shopper and took the voucher in. And that was the real trick, I think. It seems like the supermarket guys were better merchants than the fuel guys. And so petrol prices rose and customers were placated with a give back of 4 cents a litre if you had a docket. So it's kind of the way supermarkets work now anyway, and one of the reasons why they're in court with the ACCC about whether they really do mark things up and then discount them back on a special, or whether it's a valid discount or not. I'm not going to infer anything with those comments, but what it meant was that the market share for Coles and Ampol grew dramatically, and the fuel margins improved dramatically as well. So those two things happened under their ownership. I haven't really looked into the convenience store business under the ownership of the supermarkets. I don't know if it was improved that dramatically. There would have been some improvements because they have access to private label networks, so they could stock their shelves for a better margin. And there would have been certainly overhead savings because instead of having one franchisee per service station, as was the case back in the 90s, they had a management team running a whole network. So there would have been savings there as well. One of the big profit centers in convenience stores, which kind of flies below the radar unless you're looking at it as an analyst, is tobacco sales. And one of the things that has hit Viva in the last year or so is the decline in illegal tobacco sales through their networks. And in August, Viva wrote down the value of its retail sales by $245 million due to a surge in illegal tobacco sales. And it contributed to a sharp decline in their first half profit. That's not the only thing that contributed to that sharp decline, though, in 2025 profit. It was also a time when after they brought back the Coles Express leases, and then they had to rebrand them as Ready Express, so they could no longer use the Coles name. So there was a cost to that, and there was also a cost to the fact that when you're rebranding something, sales are depressed. Either the site's closed for a period, or it can't be fully stocked because you're doing it bit by bit and taking aisles out where you're rebranding it. But that certainly hurt the sales line of the business. But the other thing which I wanted to focus on, which in my opinion has been a bad investment, but may prove to be okay over time, but they purchased a business called On the Run. And they did that to bolster their convenience store network. And the AFR recorded the transaction back in December 6, 2024 like this. The $4 billion ASX-listed Viva Energy took a $1.15 billion punt last year on the acquisition of the On the Run business from Adelaide's billionaire Shaheen family. It is convinced the OTR brand will be as successful as Bunnings and JB Hi-Fi on the national stage. Until now, almost nobody in Sydney has heard of it. But in Adelaide, OTR fills a gap in the market where families can fill a basket with school lunch essentials and night owls can grab a greedy snack to go with their tank of unleaded. One of Viva's top executives I'm going to struggle to pronounce this. I think it's Jevan Bazo, JEVANBOUZO. When I saw that, I thought Jevan Bozo, but I'm probably mispronouncing it. Anyway, he was convinced it will be embraced by customers and held in the same regard as brands such as Chemins Warehouse and jewelry chain Lavisa. OTR outlets trade 24 hours a day, 7 days a week. It's creating something that's a little edgy. People drive past and think, whoa, that's a little different, Bowzo says. Each conversion of an existing Coles Express petrol station owned by Viva costs an average of $1 million. And that was December 6, 2024 in the AFR. So not only are you having to hit the sales by converting service stations to a different brand, but it's costing you $1 million a go. And Shell would have 1,000 outlets around Australia. Not all of those need rebranding, but even if you're talking 100, and you're talking a lot more than 100, it's $100 million. So it's a huge hit to CapEx. And you need a big sales boost or margin boost to cover that. And what's turned out to be the case is that although initially well received, but now considered overpaid for, as On the Run was successful in SA where it benefited from restricted retail trade practices, which are not the same in other states, the share price has been in decline since the completion of the OTR transaction in early 2024. And net profit, excluding the impact of oil prices on inventories, fell 67.4% to $62.6 million in the 6 months to June 30, 2025. So that's the first half of 2025. So some people have come out and said Shell were duped. Some people have said they didn't understand the South Australian retailing network, but basically South Australia had restrictive trade practices for supermarkets, and they had lower or less opening hours than they do in the other states, and OTR filled the gap and did well because of that, not necessarily because it was a shiny new convenience store that did better than the other ones on the East Coast. So in September 2025, the AFR reported the head of Viva Energy's convenience retail business has resigned, adding to investor concerns about the outlook for the struggling division and triggering a major sell-off in shares. Jevan Bazo will step down at the end of the year following a decade-long stint with the fuel retailer, where he also served as Chief Financial Officer and Chief Operating Officer. Viva Energy shares fell 8.6% to $1.80 on Monday and have lost almost 32% in value so far this year. Bowzo was appointed in late 2022 to run Viva's 900-store convenience retail network consisting of On the Run, Coles Express and Liberty convenience stores. He was central to the group's $1.15 billion acquisition of On the Run business from Adelaide's billionaire Shaheen family in 2024. So that was in the AFR September 22 last year. So it didn't work out, and he's fallen on his sword. That's sort of one leg of what's going on at Shell. They're spending a lot of money converting brands, and they're not getting the uptake of either margins or sales to benefit from that. So it seems a bit of a failure. Plus, they paid over $1 billion to use the brand at the Viva network in South Australia and use the brand elsewhere, and it doesn't seem to have taken off. The other thing to focus on with Viva Energy is the refinery side of things. So we're down to 2 refineries in Australia, and the government's keen for that to not get much lower. And I guess even back when I was working at Shell in the 90s, it was pretty clear that refinery economics in a small country like Australia were being squeezed by what we used to call the super refineries in Singapore, but I guess there's now refineries in China and other areas that are equally as big, which can pump out refined product from crude oil on a massive scale compared to the ones in Australia. And they have economies of scale, which means that even when you pay for the transport, you're still buying it cheaper from them than you are doing it here. And so, but you still have to sort of price off those refineries, because if you get too far ahead of them, then someone will pop up in the market and start importing from Singapore and putting it through an independent retail chain, which has happened in the past. The other thing about refineries, and given that there's only one owned by this company now, is that they occasionally need to shut down, or they're forced to shut down, either for maintenance or because of problems. So In 2025, there was a large planned maintenance of the Geelong refinery, and one of the key units of the business of refining is called a catalytic cracking unit. It's the driver of fractional distillation, which allows you to turn crude oil into different grades of refined product. It was shut for 10 weeks. And that was part of a plan to schedule that maintenance, but it was also to install what's called a low sulfur gasoline unit to meet new fuel standards. And that's certainly one of the issues with the refining business, is the government can decide that, you know, you've got to have a different grade, you've got to take sulfur out of it, you've got to do this or that with the oil to reduce its impact on the environment. And that's a major impact on the refinery. Coupled with the low refining margin, it means that this business can lose tens or hundreds of millions of dollars when Singapore gets extremely sharp with its pricing, or if they have to shut it down to do maintenance, either because they need to or because the government requires a fuel standards change. So all in all, if you owned a refinery in Australia, you probably would have shut it by now on the basis of that and just imported it from Singapore. But Australia wants to maintain some refining capacity here in case we're ever cut off from Singapore for whatever reason. And they've come up with a thing called the Fuel Security Services Payment regime. And it effectively guarantees a minimum refining margin to keep refineries operating for fuel security reasons. So for the Geelong refinery, the subsidy activates when the refining margin marker falls below about $10.20 a barrel. And then the support ramps up gradually. Caps out at 1.8 cents per litre when the margin drops to about $7.30 a barrel. So the government is basically saying, we'll put a floor under refinery profitability, which encourages Viva to keep the refinery going, but you're basically getting into the game of government handouts here and rent seeking. We've seen that before with other industries like the car industry, and eventually over time it could lead to shutdown and exit. But it also changes the dynamic, I think, of management and their incentives, because you're now better off being a good lobbyist than you are being a good operator of a refinery. It hasn't meant much in the last 12 months. So in 2024-25 Q1, there was about $25 million paid to refiners, and most of that went to Viva. There's only 2 refineries, as I said. In 2025-26 quarter one, there was nothing paid because the margins were above the support threshold. So it hasn't been material at the moment, but it could be in the future. And to quote some of the numbers, Singapore, China, and South Korea have huge refineries now that can process between 300,000 and 600,000 barrels per day. The Geelong refinery chugs through about 120,000 barrels a day. So it does lack economies of scale. And coupled with that, you've got the costs of bringing crude here, and you've got higher labour costs and more stringent environmental compliance. So there's a few things stacked against running a refinery. And I would think if Viva had a chance, they might actually mothball Geelong as well, or try and sell it, or spin it off, or something like that. The contra argument to that is it's vertically integrated, so you're not reliant on Singapore as a third party for your wholesale product. You can control somewhat what the margin is you're buying it for or making it for. If I look at the results for Viva after mentioning all those things, tobacco sales, rebrandings, on the run, not working, and refinery shutdowns, the second half results to December 2025, fuel sales were flat. In the retail division, they were down 1.9%. Convenience store sales, however, were down from just under 1.9 billion in 2024, like for like, or similar period, down to 1.65 billion in 2025. And a lot of that was because, as I said before, declining tobacco sales. They used to make up 30% of a convenience store sales, and they were down to 24% over the course of calendar 2025. So unless the government changes what it does there, or cracks down on illegal tobacco sales, that's probably how it's going to stay going forward, which is a big hit for this company. And then there's been the conversion of stores, which has been a short-term impact to reduce sales. They also bought another convenience store network called Liberty in the last little while, and they've been bolting that into the network as well. and that's also taken up time and effort and capex. And one of the issues that they're slowly working through is that all these different convenience store networks they're buying have their own supply chains, and they're having to run out contracts or buy out contracts and then try and streamline all the supply chains into one, which is taking a bit of time and effort and money. All in all, not a great half for the business. NPAT was down nearly 28%. Dividend was cut by 36%. And I'll point out it goes ex-dividend in 3 days, so on the 13th of March. But as I said before, the large listed competitor Ampol's also faced similar headwinds, and their 5-year share price graph looks a little bit better, but fairly similar to this one. Ampol isn't on the QAV buy list, however, its QAV score is 0.03, whereas Viva's is a bit higher than that. So to turn to the QAV numbers, stock price I did this at was $2.03 this morning, and it has dropped a little bit today. I think it was $1.98 before we went to air. 203 was 85% of consensus target, so it was less than consensus, but it was greater than IV1, 57 cents, and IV2, $1.52. Interestingly enough, Stock Doctor Financial Health is marginal, but the trend is steady. So Stock Doctor don't give it a great report from the financial health point of view. Stockopedia is similar. F-score is 5 out of 9, which is kind of marginal as well. And its quality rank is only 65, and it's only 75 overall. So Stockopedia isn't really liking this stock either. PE ratio is 18.4 times, which interestingly enough is the lowest in 3 years, because for a couple of those periods anyway, they didn't have positive earnings. They made losses. So there's not much to compare that to. And it does score a 2 on our checklist for having the lowest in 3 years. PropCap is 4.72 times, so it does throw off a lot of cash, like a lot of retail businesses too. But a PE of 18 times suggests that it's not all falling to the bottom line. It's getting used up along the way. Probably most notably in CapEx, I would have thought, given all the conversions and acquisitions they're making. Net equity per share is 88 cents, so we can't buy it for book or book plus 30. And I want to also highlight that's NEPS, but NTA is negative 22 cents. So these acquisitions are sitting on the balance sheet and are probably taking goodwill impairments. So we're not getting positive NTA for this company. Earnings per share growth, however, Stock Doctor are forecasting it to grow at 35%. So its growth over PE is 1.87. So we give it a score of 2 for that. So I think, that's one of the risks this company faces. Certainly that forecast growth, I don't think will be on the back of the recent oil price rise. It's going to be more driven by perhaps a clean year operation in Geelong for the refinery, the sorting out of the supply chains, the convenience stores, and the company's called out they'll spend less on CapEx going forward now that they're bedding down those acquisitions. So it's probably based on that, but I think it's got to be a risk given the history of the industry. Yield is 3.29%, so we can't score it for that. Directors only hold 1% of the company, so we can't score it for that. But it is a new 3-point trend line buy because of the oil price rise, so we do score it for that. Doesn't have consistently increasing equity, so we can't score it for that. So overall, I'm giving it a quality score of 11 out of 16 or 69%, and a QAV score of 0.15. So it's down the buy list quite a bit, and it may fall off if the oil price corrects. So I guess it's a watch this space. It'll be Josephine today, so you don't have to rush out and buy it today. You can wait and see what happens. A lot of risk with this one. The refinery risk is a big one. That someone builds an even bigger refinery somewhere in China, and margins get crunched again. It's a large single asset, so it needs to be shut down to do maintenance, which crimps the earnings from it. Again, regulatory changes could impact it, and perhaps the biggest risk from regulatory changes isn't in rules around what kind of fuel you refine, but it's probably going to be around electric vehicles. And even though that seems to be on a slow growth trajectory this year, who knows how long that will last and whether these companies are going to have to run an end game to get into the EV charging market if fuel retailing drops off a cliff in the future. It's certainly a risk anyway. I can't predict that. retail competition has always been a risk for this company. Competes with major players like Ampol, BP, 7-Eleven, and other smaller chains. As I said before, the fuel margin is the strongest it's been in my lifetime. So they are acting, they are behaving at the moment, but all it takes is for someone with a bit of money to set up a network and import from Singapore, and that will, I think, be a problem for the oil industry, as it has been in the past. Then you've got all the regular regulatory risks, ESG pressures, etc. So, and wage costs escalating, although there's generally only 1 or 2 wages per service station these days, so it's not too bad. But I think the biggest 2 risks I can see are that it doesn't achieve its 35% forecast EPS growth, in which case it'll miss guidance and the share price will take a leg down again. And probably the biggest short-term risk is how long does the oil price stay at levels which the market likes and supports margins for this company. And this is a sort of short-term blip that might last a week or 2 and then go back to where it was. My last sort of leading comment is, do we really want to own a stock that only makes it on the buy list when there's ructions in the Middle East or with Donald Trump? Or so I'm not in any way recommending this stock, even though I used to work for the company. Certainly is a big company and lots of assets, and management's doing working as hard as they can, but there are a lot of tailwinds, a lot of headwinds, sorry, for this industry, which there have been for a long time as well.
I added it as a possible buy back in June of last year, and it's down 3% since then, so it hasn't been a winner.
No, and look, I think I didn't cover opportunities. The biggest opportunity is that they stop acquiring, stop rebranding, sort out the back end. So, sort of batten down the hatches and write off all the goodwill they need to because of the on-the-run acquisition, and then start going back to making 40% margins in the convenience store and just chuck out cash. It's kind of been management's distractions which have been the one of the biggest problems for this company in the last little while.
Well, thank you, Tony. That's Viva Energy. When we do our American show today, I'm going to be talking about another oil company, Murphy Oil. It's been just oil companies wall to wall.
It has.
Lately.
Yeah.
That's all we've had to talk about.
I've been waiting 20 years. I used to work for an oil company.
Yeah. All right. Well, I think that's after hours. Tony, what have you got for me?
Don't have much. The only thing I can talk about is Baffleck. My horse won a race on Sunday. So that was nice.
Congratulations.
Yeah, so that was good. But yeah, I haven't really watched anything of note or read anything of note. As I was saying before, I've been reading Michael Caine's novel that he came out with a couple of years ago, Deadly Game. But I've put it down because after about reading the first half of it, it's pretty generic, sort of Robert Ludlum book. Nuclear bomb goes missing in central London, and Detective Harry, whatever his last name is, doesn't matter, it's Harry Palmer, has to track it down. SAS busted his knee, and now he's in the police force. So it's kind of a trope. But the reason why I bought it, which I was telling you off air, was that Michael Caine's either written or had a lot of biographies written about him. And he said, I'm going to stop doing it because my lawyers keep redacting so much of it because they say I'll get into trouble. And he thought the way of putting all those stories into print was to write them in a novel form. But I'm disappointed that this doesn't strike me as being that kind of salacious, gossip-filled novel that I was hoping for.
But as I said, unless he really had to track down a nuclear bomb that got stolen in London, he's just not allowed to say that. So that's what you should be taking away from this. That's the real story.
Oh, they're actually, okay. Well, that's one for the conspiracy theorists, that there really was a nuclear bomb in London that was stolen.
And Michael Caine personally.
By Russian mafia. Yeah.
Well, I've got my Michael Caine glasses back, as you'll see. So that's good.
Yep.
Chrissy brought them back. Well, I finished The Day of the Jackal, and I have to say, terrific read. Really terrific. Really, really enjoyed it. It was...
Great movie, too. Have you seen the movie?
I tried to find it and
Mm.
it wasn't available on any of my
It's pretty
streaming
old.
services,
Yeah.
which is a never ending source of annoyance to me that every movie, like as I keep saying, every song ever made is on Spotify. Why isn't every movie ever made on some
Right.
sort of streaming service? It's just it's ridiculous. Anyway, and then I started reading the Odessa file, Forsyth's next book, which I'm only just part way into it, but interesting. I downloaded 2 versions of it for some reason, started reading one, then started reading the other, and they both started differently.
Oh, okay.
So I went into Gemini and I was like, what's up with this? I've got 2 copies of the book, of the ebooks, and they start differently. And it said, well, you've got the US version and the UK version. The US publishers
The nuclear bomb
decided
that's been stolen.
the US publishers wanted it to get straight into the action. So
Right.
he had a little bit, like just a couple of pages of preamble, which the US publishers cut out and got straight into the action side of things, which I thought was weird. So I was like, well, screw them. I'm reading the UK version. But yeah, hadn't read any Frederick Forsyth before. So this is a new thing. I'm enjoying it.
He is good.
I've been watching a bit more of the Scorsese doco that you told me about.
Yep.
Slowly, making my way through that, loving it. Fascinating. Yeah, I watched the episode that you were telling me about where he made Alice. No, not Alice. The one before that, the Corman film, and all of his friends disowned him.
Yeah, Boxcar Bertha or whatever it was. Yeah.
Boxcar Bertha. That's right. Yeah. And I can't remember. I think it was who was it? John Carradine. So one of his friends watched it and said, put his hand on his shoulders and said, "Marty, I love you. Don't ever do that again."
Might have been John Borman, was it?
Don't know.
Yeah,
But
okay.
yeah, terrific. And then he goes and makes
which was, as you said, was pretty tough because Spielberg was making telly movies like Jewel and
which was pretty good. I love Jewel.
Jewel was good, yeah.
Yeah. And I watched Boxcar Bertha, and it was okay. It was formulaic and trashy and all that kind of stuff. But yes, but then they go and interview the guy that was the basis for De Niro's character in Mean Streets. Who was still alive.
Johnny the Hat. I know.
Johnny the Hat. That was amazing. Yeah. But just all that early stuff of just going, whenever you see De Niro in the early 70s, in that role, just Johnny Boy, just so
mesmerizing, isn't he?
Yeah, electric to watch.
Yeah.
Like, such a performance. And then
that's such a great movie, Mean Streets. I went back and watched it a few years ago.
But then they have that clip that I've seen a million times of him auditioning for Sonny in The Godfather. Like it just, again, like his audition for that, just bouncing off the wall level of insane. His ability to capture these characters where you don't know what's about to happen because he's smiling, but his eyes saying that he's about to kill someone, stab someone. Fantastic. Yeah. I've also been watching a great doco on Tupac, which is blowing my mind. Now, I know you go backwards and forwards on rap. You don't like rap, but you like the Beastie Boys. You ever listen to Tupac?
No.
I've been listening to Tupac since the 90s. Didn't know much about him, though. I knew his mother was a Black Panther, but I didn't know much about her. Documentary on Disney is fantastic.
Okay.
Footage of him as a 17-year-old at high school, just articulate, political. His mother was this incredible woman who was one of the leaders of the Black Panthers in Harlem in the late 60s, got arrested as part of J. Edgar Hoover's COINTELPRO destruction from the inside of the Black Panthers. She and about 20 others got arrested, conspiracy to blow up government buildings and kill people.
One battle after another.
She defended herself and was so convincing that the judge threw out the whole case because she exposed the fact that one of the other um, suspects was actually an FBI agent that had been paid to infiltrate, and he was the one that was coming up with all the plans to blow stuff up. And she exposed the whole thing, and it got thrown out. But she'd already been in jail for 2 years, then came out and started these free hospital programs for the black poor in Harlem. And anyway, so he grew up in this with this mother, single mother, grew up with this political activist mother, and then when he was like 18 or 19, he was elected to be the chairman of the new African Panther Party. They rebooted the Black Panthers after it had been shut down. He was supposed to be running it, but he became a rapper instead. It was like how quickly his whole objective was how quickly can I get critical mass to get my message about what it's like to be young and black out into the public, whether it was going to be through the Black Panther Party or it was going to be through rap, and it ended up being rap and this whole thing. But yeah, anyway, really interesting doco.
Okay, I'll take a look.
I mean, yeah, I mean, I love stories of black civil rights movement in the US and what they've had to fight against.
Yeah. And is there a conspiracy theory around his death?
Well, there's always been this thing between, whether or not corrupt cops were paid by one of the record labels to kill him. There was the suggested at the time was that it was Biggie Smalls and Notorious B.I.G. that had him killed. Then Biggie got killed a few months later. Then there was, I think the guy who ran Death Row Records, Suge Knight, was supposedly involved in it. Then there was a story that corrupt cops were doing it for whatever reason because they just hated him because he was young and black and rich and mouthy or whatever it was. But yeah, no one knows really who did it.
I love that scene in The Sopranos where the black rapper wants to get cred by being shot, so he pays one of the Sopranos henchmen to shoot him. He shoots him in the butt.
Yeah. And I think it was different, the storyline, but when one of the black rappers wanted to get all the money for the black blues musicians or the R&B musicians off of the Jewish friend of Tony's that ran the record companies in the 50s, and they were trying to shake him down to get what they were owed. What else? Yes, as you know, Gemini told me I have the fitness regime of an elite athlete, top 1% for my age bracket. You can laugh.
Well, is it? I don't know much about Gemini, but I found ChatGPT to be fairly obsequious when it, or fairly fawning. So
I took my Apple Health data from the last year and I gave it to Gemini, and then when it did tell me that I was the world's greatest athlete, I gave the same data to Claude and to Grok and to Quen, and they all told me the same thing, that I'm a miracle of modern science, Tony.
Well done. You'll get a medal for that. And you can tell us about it.
I thought you'd like that.
This is a real turnaround. When I first met you, you were like, sports for the masses, and it's bread and circuses.
No, I still believe that.
Banned and
I still believe that. Right. Televised sport, organized sport is still, for the masses. Going and playing sport or performing exercise in and of itself, I don't have a problem with. Although, Chrissy will remind me that I used to say people that spent all of their spare time exercising had a problem. They were avoiding.
Yeah, we had that conversation at some stage too, that they could be doing more productive things.
Yeah. Well, then I had a heart scare and realized that I needed to take my health seriously. Yeah.
Well, good on you. Anyway, that's great.
I have learnt the enjoyment of exercise.
The endorphins.
Yes. Yeah. That's really what it is. And it's also realizing that I couldn't put it off any longer. At my age, I'm going to get... That's what Gemini said. Most people in their mid-50s are slowing down, flat out walking for 30 minutes. You're doing 12 hours of Kung Fu a week. That's pretty impressive for your age. Staying flexible, keeping my joints whatever, limber. Yeah.
Mm-hmm.
And I coded the commodity checker. I mentioned that. Going camping this weekend for the first time in years if the rain stops.
Where are you going camping?
Lake Broomba.
Taking an ark?
Yeah. Yeah. If you need an ark, I know. If you need an ark, I know a guy.
Okay.
Yeah, I know a guy. Get it?
I don't get that. Oh,
Noah. I know a.
Noah. I know a guy.
guy.
Okay. Yeah. That reminds me of that Bill Cosby record. Noah build an ark. Make it 3 cubits by 3 cubits by 10 cubits. Okay, God, what's a cubit?
When did Bill Cosby sound like this? Is this after he got out of jail? That was
his impersonation of God.
What is Bill Cosby doing these days since he got out of jail? I haven't heard it from him.
I was going to say 20 to life.
He wasn't in the Epstein files, as far as I know, surprisingly. Yeah. Say what you want about Bill Cosby, but he's not in the Epstein files. Yet. What about, I mean, we shouldn't laugh, but what about the FBI's thing this week? They released the documents that had the interviews with the girl who said that he and Epstein raped her when she was 13. And the FBI hadn't released these files before, even though they said they'd released all of the files. But then there were mentions in the files that they did release about this file, which they hadn't released. And they said, oh, yeah, we'd accidentally filed it as duplicative. Right. Okay. Sure. Yeah.
Well, if they release it, then we have to have another war to distract us.
Yeah.
Mission accomplished, Mr. President. No one's looking at the Epstein files.
Yeah. Let's go talk about another oil company, Tony, on the
Yay.
More oil. Drill, baby, drill.
Makes me happy. Yeah.
Take care. Have a good week.
Happy A6.